What is going on, YouTube? The Dividend Stock King here with another video. And today, the question is today is what are three factors do you look in for a strong dividend stock? That's a very good question because I have three things I look at. And what's crazy about it is I wrote a blog post about this. So I've been reading parts of my blog post, and I have a link below the video for the blog post. You read it for yourself. So let's get right into it. When I look at for a dividend paying stock, the first thing I look at is the company itself, the company name. The most important thing about a company is how they make money. How the company makes money. Do they make money selling products? Do they make this sort of service? Do they loan money? Do they, refinance homes? Do they build homes? How does the company make money? What sector? What sector does they make money in? Is it financial? Is it utilities? Is it food industry, hotel industry? What industry they're in and what do they do to make the money? The most important thing for a dividend paying stock is how they make money. Okay, how do they make money is the main thing. I like Main Street Capital. Main Street Capital loans money to middle to lower market companies. They also provide financial management services as well. They loan a lot of money to people, and they have a lot of companies that they invest in, and the companies are different companies, so their portfolio is diverse, and the companies they invest in. So the next factor I look in is the graph. I should have it here. Is the graph of a stock. And Robinhood is terrible at this. Here we go. So while I look at into a stock, okay, I see a company, I see what they invest in, I see how they make the money. All right, number two is what do I look for? I go to Robinhood or go to any stock market application, and I see their growth. I want to see the 5-year trend. This one in particularly looks good to me. So let's go to Main Street Capital, since we use that for example. So I want to go to Main Street Capital. I know they loan money to middle to lower companies. They have a wide variety of different companies they invest in, and they provide management services as well. Let's go to the 5-year graph. The 5-year graph, now I go to the 5-year graph, I like what I see. Because what I'm seeing is since 2016, they've been going up and up and up in price. And everything's going good. They're going up and up and up. They was going up for a while. They dropped down, which is okay because you have peaks and valleys, but it's more peaks than valleys. So if people say peaks and valleys, you want more valleys than peaks. I mean, you want more peaks than valleys because valleys are down below and peaks are up high. So you want more peaks than valleys, and there are more peaks here than valleys. It's going to drop down anyway. But to me, VIX looks good. The pandemic happened. People should have got this for $17 a share. I bought some, and right now it's still cheap. Not cheap, but it's still the all-time high was like $45 at one point last year. This year's $45 a share. So it's still a good price to invest in. But I see that growth. I see, okay, slowly going up. It has some drops, which every stock has dropped, but it's slowly growing up, and that's what I like to see. Okay, so that's number two, the graph. And number three, some people said don't worry about the dividend, and I agree, but I'm a dividend investor. I want to know how much money they're paying. I'm a dividend investor. And I want to know how much am I getting paid. I want to know how much they're paying. Do they pay monthly? Do they pay quarterly? Do they pay annually? I need to know how much they pay, what date they pay, how frequent they pay, the dividend yield. I got to know all that. So the third thing I look at is the dividend itself. Now, you see that's my last thing I look at because this thing if they pay me 3 cents a month for $35, I probably won't invest in it because it's not worth. I mean, I might invest in it, but I like dividends. So I'll take $35, invest in something else that pay a little bit higher dividend. So most people say, don't worry about the dividend yield, don't worry about the dividend. But here's my thing. When you are a real estate investor and you look at a house, you want to buy the house, you want to know how much it costs to buy the house, you want how much it costs to fix it up, you want to know how much money you make on flipping a house or how much money you make renting a house out. That's real estate investing. You flip houses, you want to buy a house for $20,000, $50,000. You want to invest 10,000, 20,000. So now you owe 70. You want to sell it for 120, 130,000. You want to make money off your deal. What you invest in, your time and your money, you want to make money from it. So when this guy say, don't worry about the dividend yield, don't worry about how much they pay in dividends, I'm like, I understand what you're saying. You shouldn't pay that much attention to it, but I'm a dividend investor. That's like I said, don't worry about the house condition. Don't worry about the money you make from it. Don't worry about flip. No, every investor invests in a business like a partnership or silent money or hard money. When you get a mortgage company, we get a mortgage loan, they're making money off of you. You want to make money. They're not, oh, don't worry about how much money you're going to get back. Don't worry about it. No, you want to know your return of investment. That's what you want. You want return of investment. So the third thing I look at in the dividend paying stock, the company, how they make money, how long they been in business, what do they sell? Number two, the graph. How the graph look? Is it going downhill? Why is it going downhill? Why would you invest? Is it going downhill? Do some research. Is it go back up soon? If it's going downhill, I might not like that. I want to go on some going up. And number three, how much they paying? If they're paying 85 cents a share, I'm like, hold on, that's a little bit too high. Major Cal pays 20 cents a month. That's fine, but they go up to 85 cents a month. I'm like, whoa, 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 whoa. That's a little too high. Why are you paying so much? Because I know stocks now that is way more expensive. A better company pay less. Like, we got to figure what's going on. So that's why I look at. Those are my factors in a strong dividend stock. Management Capital, in my personal opinion, is a strong dividend stock. These are my opinions. You do your own research. Don't take my word for it. I am not a stock expert. I am not a whatever. I'm not a financial expert. I'm not going to give you financial advice. Go to a professional. Don't listen to me. I'm going to give you my opinion. But for me, I believe that Management Capital is a strong dividend paying stock. Look at the chart. It pays every month on the 15th. I've been being paid ever since I've been investing in them. I like Management Capital. That's my personal opinion. Please subscribe to the channel. Please like the video, share the video, and subscribe to the channel. I'll see you next time.